Good evening, ladies and gentlemen. Let me welcome you on behalf of the Bombay Management Association for this edition of our very popular Wednesday Wisdom webinars. As all of us are aware, the topic that we have for discussion today is something which is of great interest to all of us. So to say, what is going to be the economic outlook in the medium term? We've now transitioning in a period from lockdown towards gradual unlock across some of the sectors. And there have been so many reports, analysis of what lies ahead. While everyone loves to be optimistic, yet we need to know the real facts. And to discuss some of this, we have two very accomplished gentlemen here with us this evening. I'm going to introduce them purely first in the alphabetical order. Anirudh Gupta, incidentally, who is a life member of the Bombay Management Association, an alumnus of Mumbai University who specialized in the Master of Management Studies, has perhaps worked with the who's who in terms of the banking industry organizations such as DBS, Barclays, HDFC. Before, about 8 years ago, decided that he would be his own boss, launched up Ashiana Financial Services, which is a leading consultancy organization in the field of financial services. Thank you, Anirudh, for being with us here this evening and helping us mastermind this entire session today. I must place on record our gratitude to Anirudh for having connected us with Mr. Madan Sabnavis and making him part of this wonderful discussion that we are going to initiate.
Pleasure is all.
For those few of us who don't know Mr. Sabnavis, he is the chief economist at CARE. And I'm sure this is an organization we respect a lot and we look forward to their reports and reviews time and again. I must confess that after reading Mr. Sabnavis's profile, I am tempted to call him Professor Sabnavis for the simple reason that he has done more than 1,800 articles as on date. I think that's no mean achievement, and I especially like to congratulate Mr. Sabnavis on that effort. He's, of course, an alumnus of the Delhi School of Economics, where he did his bachelor's, his master's, and his MPhil. A man with very great accomplishments. Over the last 10 years, has been the chief economist at CARE. Mr. Sabnavis and Mr. Anirudh, on behalf of Bombay Management Association, this is Professor Mani expressing deep gratitude to both of you for sparing the time this evening to help us understand a little more about the economic outlook in the medium term. As we always do, ladies and gentlemen, we will request both Anirudh and Mr. Sabnavis to share their initial comments, observations, and thought processes. After which, your questions are welcome in the chat box, and we shall have a meaningful discussion along with them. May I request on this note, Anirudh, to set the ball rolling with his opening remarks. Over to you, Anirudh.
Good evening, fellow members, Professor Mani, Mr. Sabnavis. It's always been a pleasure to be on the other side learning in this environment. To put up my 2 lines on what I think is the way ahead, I mean, the way to look at it, the future is to look at the past and evaluate the present and see where it is going. That's what a wise man once said. So looking at this, when we look at what we have accomplished since independence, or let's say till the 18th century. In the 18th century, we were 25% of the world trade. After that, our share reduced to the current 4%. What has led us to this fall? Well, that is what we have to examine, understand, and see what is the road ahead for. If you look at what we have accomplished since independence, we have a good, strong food buffer. We have good capital market reforms. Our capital markets are among the best in the world in terms of processes. We don't have that much debt, but I think that can happen over a period of time. As far as deepening of debt markets is concerned, that remains to be an issue. In terms of what we can do to accomplish better. We need to have mechanisms for infrastructure related assets to for the capital raising exercise, for a simple reason that if you are to solve the infrastructure problem in our country once and for all, in 2005, it would have cost us 150 to 200 billion dollars. Now, what most senior economists comment, it will cost at least $500 billion, which is $500 billion going forward. If you look at how infrastructure has evolved, it is basically in a country of our size, it evolves on the premise of multi-model working. Where it has worked efficiently, it means that you have a port, you have a road, and you have deep connectivity, which gives an access to the market. Now, what is the advantage of this approach? The advantage of this approach is that your cost of transportation or logistics is optimal, and you are able to spend more money on the product if you're looking at it as a business strategy. So if you look at Adani, they have followed a multi-model approach and they have been successful. If you look at areas where development is needed, if you see the northeast and the waterway side needs to be connected from the Ganga. If you see the cost of doing this, for per kilometer, it hardly costs you 1 rupee on the waterway. It costs you 7 rupees on the roadways and 11 rupees on the railways. So, I mean, the answer is pretty obvious. The question is whether the infrastructure is spread and whether it is optimized over a period of time once it is laid out. In terms of what is the future is what it is now. So if you see 90s, it was a period of IT and it was a period of recognition for India that yes, India is strong in IT. And there was some sense of respect that Indians are good at IT. Now the fact is that, is it the highest value chain in IT that is helpful to us? No. We were doing a cost arbitrage and still are doing a cost arbitrage. To some companies have evolved to consulting, but not many have. Coming to what is the future, artificial intelligence is the future. If you see US and China, China is almost equivalent to US in the AI capability. What World Economic Forum tells us is the focus in their India operations, when we talk to the India head, is that they talk about focus on the AI side. And by that, what they mean is that next 10 years is a decade of AI. That is how they like to look at it. So on a broader note, we have to focus on where our strengths are. I guess what we missed in the last 70 years in India is manufacturing. That was one big bus we missed. And second one big bus we missed in the last 70 years was complete education within India at a basic level. So these are the two areas where gaps have been there and still continue to be there. Do we think that manufacturing we can compete? I think we can if we put money in R&D and develop niche products. But if we don't put money in niche products, we think it is too risky, then we are adopting a trader's mindset. If you're adopting a trader's mindset, you might as well import from China or Hong Kong or Taiwan and then sell it in India on credit terms most suitable to you, depending on how good the client is. So that is how we have been as a nation so far. What is the other area where we can be good at? The fact is not everybody can be an AI specialist or a data scientist. So what is needed? We need basic jobs which can be across capital markets, financial intermediation, which can be across tourism, which create some sort of confluence. And that can help us get from that 1 million jobs which we generate every year to 2 to 3 million jobs in a year. Because these are sectors which employ people at scale. What is the challenge that we face today? Challenge is that on account of digital, all processes are automated. Because of which, let's say if I were to employ, let's say 50 people next 10 years, I would say if I employ 15 also, that is sufficient because I'm good at using technology within the same efficiency parameters. So given that calculation, most people will say that, okay, what is it that we should be doing? The point is we need to have a broader strategy which focuses on a mix of infrastructure, tourism, focuses on services, optimal tax rates at the GST level to increase tax compliance, and higher level of vocational services since the school days. So that helps once a child gets out at a graduate, you still have something where you can at least earn your dal roti or bread and butter. So, I mean, that is how we look at it. The thing is that if you look at the medium income across most countries, It is $10,000 per annum. Our per capita income is $1,800 roughly, give or take $100, $200 here and there. And let's say, how much time would we take to get there? I guess next 10, 15 years, we can get to $5,000 to $7,000 if we do a decent job at it, at all of this put together. So I guess the future is bright. It's just that a matter of adapting to the course and see how we can blend ahead.
All right, Anirudh, that was a very optimistic note, and I'm sure that we are going to have some more discussion on this as we progress. Thank you for that wonderful start, and may I now request Mr. Sabnavis to share some of his wisdom with us, and then we can proceed to engage in a discussion. Over to you, sir.
Doctor, thanks a lot, Dr. Mani. Now, what I'm going to share with you is my views about what we are expecting in the current financial year. Because I think we've had this COVID-induced economic lockdown, which has created chaos across all the sectors. And I think what we are seeing today is some kind of recovery. There's a bit of euphoria also with people discussing whether this kind of a recovery, which we are seeing in the last couple of months, whether it's a V-shaped recovery or things really looking up. So I would like to put what our perspective really on this particular subject is. When we started off towards the end of March, when the economic lockdown was imposed, our estimate was that India's GDP would be actually growing at around 1 to 2%. That was a positive number which we looked at. Subsequently, we had modified it to a negative 1 to 2%, went to minus 6.5%, and finally we came to a number of around minus 8.2%. This is after we got to know what happened in the first quarter of the year. Now, we should remember that when we are talking of this rather disastrous position which we have gotten ourselves into, because this has been the first time that we're talking of a negative growth rate in the Indian economy. And we also had the IMF's World Economic Outlook in the month of October, which actually said we were growing, or rather degrowing at around 10.3%, which also meant that we were one of the worst or the most unsatisfactory performing economy. I think the media actually picked on to the fact that our per capita GDP was going to be lower than that of Bangladesh, and there was a lot of hype which was built about it. So subsequently, when we have seen that there's been an improvement in the auto sales, in the consumer sales during the Diwali time, I think people have looked at it very, very positively and said that, look, are things really looking up? The worst is behind us. Now, what's really important for us to remember is that the kind of crisis which we have today is more a man-made crisis. When I say man-made, if I go back to saying historically, when we're looking at different crises which afflicted the world economy, it was generally caused in the financial sector, which had repercussions on the real sector, and that's how economies slid into recessions. So if we're talking of the Lehman crisis or the Asian crisis, or even the Black October, I think it was called in 1987, almost every 10 years, every decade, we had some kind of a crisis which came about. It was more a case of something going wrong in the financial sector, which spilled over to the rest of the sector. And then there was contagion depending upon how much a country was globally integrated. But a kind of crisis which we have seen in India is more because we just decided on one particular day that we were going to lock down the economy. Nothing could be produced, or rather only limited amount of goods and services could be produced. And none of us could really move out. We cannot move out to work. We cannot move out to buy or sell goods, which really put the economy into deep trouble. I think when we are looking at this number of minus 24% degrowth in GDP for the first quarter, it was primarily because the economy had closed down in the months of April and May, partially open in the month of June, and that's how we came to this number of minus 24%. Now, the important thing is that various estimators have different kind of views on the Indian economy. We had something like minus 8.2, the RBI had 9.5, IMF had 10.3. Some global agencies had something in the region of 11, 12, 13, 14, 15. So we have had a whole plethora of estimates between the range of around 6.5% to around 15%. Now, the important thing again here to realize is if I had a minus 24% degrowth in the first quarter, and we are talking of a single digit degrowth or maybe even 11, 12%, depending upon what we will look at, it's actually based on the premise that as the economy opened up, the economy would be performing less worse than it did in the previous quarter. So sequentially, Q2 should be better than Q1, Q3 then better than Q2, and so on and so forth. So while we'll still be largely in the negative zone in quarter two and quarter three, but definitely the numbers will not be as ghastly as minus 24%, which means that all of us are factored in the fact that at some point of time, there would be things turning around, not because anything great was happening in the economy, because of the fact that we were allowed to resume certain services. Individuals were allowed to go and buy and sell goods. So because of the economy unopening, things were going to turn around. So therefore, we don't get too euphoric when we see these numbers coming out, PMI numbers saying that it's an all-time high of PMI in manufacturing. PMI is largely misleading because it does a month-on-month comparison. It's based on a questionnaire to a fixed set of companies, which is not representative of what's happening in the country. But still, it's an early indicator which one gets. And therefore, if you're told that a PMI, which was less than 50 for around 3 or 4 months, came past 50 for manufacturing, now in for services for about 50, it means that companies are better off. And simply put, I would say that if hotels were not allowed to operate up to September, opened up in the month of October, in October, all hotels would have given an affirmative saying that I am better off compared to September. So automatically my PMI would also go up. And accordingly, my indices would show that the economy is recovering. But we have to treat it with caution. It's a part of the normal process, which all of us are factored in. Now, when we're talking of this kind of crisis, the important thing to look at is what exactly has the government done to ensure that we stay afloat. I think I would like to distinguish between two kinds of approaches which are there. One is where the government start spending a lot of money, cutting taxes, giving people cash. And a lot of Western economies have actually done that, where UK, US gave cash back to lots of people. If I was unemployed, I was paid the wages, a certain proportion of that was paid by the government. So that is one way to keep the economy, which was moving. The other way is to actually create a kind of a policy framework which looks at a medium term, saying that let's create an enabling environment so that as and when this ghastly incident is behind us, we would be able to get back on our feet and grow at the earlier rates of around 8 to 9%, which we had in the earlier part of last decade. I think the approach which the government has taken has been largely a combination. Looking at the very poor people, it said that, look, these people require sustenance, so therefore there was free food given, the NREGA program was extended, NREGA wage was increased. So everything that required relief which had to be provided, which also included the cash transfers under the PM Kisan scheme, people got that kind of relief. In terms of what it was doing in terms of a stimulus, I think we need to again distinguish, even though I think on Friday, I think the finance minister did talk of 15% of GDP being the stimulus. Yes, a way of defining the stimulus, but it was not a fiscal stimulus. It was more a case of saying that 15% of my GDP is broadly speaking around 200 lakh crores. So if I say 200 lakh crores in nominal terms, I've spent around 30 lakh crores in terms of stimulus. It was mainly in the form of combination of certain measures taken by the RBI in terms of providing liquidity in the system. This could be an open market operation, it could be a CRR cut, it could be a long-term repo operation which came through TLTR, so on and so forth. Then there were certain policies which are more of a medium-term framework, meaning thereby that funds are going to be given over a period of time. Certain amount of generation of wealth is going to take place over a period of time. A lot of guarantees were given for SME loans, some kind of guarantees for NBFC, so on and so forth. So it was a combination of direct relief for the poor people and a policy approach in terms of reviving the economy, but that would be more for the medium term. So notwithstanding all these factors, if we look at what's going to be the fiscal health of the government, we believe that it's still going to be fairly nasty. Instead of the 3.5% fiscal deficit which they spoke of, we are looking at a number of around 9% for the central government and maybe around 13% for all the governments put together. I'm not talking too much about the controversy which was there of late on account of the GST compensation, because when the economy slows down, revenue slows down. If the revenue slows down, your GST slows down. GST slows down, then the center is not able to collect revenue, states cannot collect, center cannot compensate the state. So we had a kind of a controversy which came about last month, which has been resolved today, additional borrowing, which is being done by the central government. Now, in this kind of a situation, what we have really seen is that we would have normally expected inflation to be benign, but we have seen that inflation has been high. It's been about 7%. And it's been caused both by supply side shocks as well as, I would say, policy induced shocks. I say supply side shocks is essentially because of certain turbulence which has been in the agricultural sector. We have seen food prices going up. The food inflation is high, and that's over which nobody has any control. We've increased the MSPs. Farmers are getting slightly better prices, but it's a zero-sum game. If farmers are getting higher prices, we have to be paying higher prices. So therefore, we have seen food inflation has seen some kind of natural upward buoyancy, which has been noticed. On the other hand, we've seen that the government has been partly responsible for higher prices. And I think all of us know that the prices of petrol and diesel have been increased, even though the international price of crude oil remains fairly stable in the region of around $40 per barrel. So by increasing taxes to make sure that the revenues remain more stable, at least on the side of excise and VAT for states, excise borders, we've generally seen that the government has also added to inflation in a definite manner. And then we have seen that certain services, as they've been opening up, you're allowed to operate at 10%, 20% of your normal capacity. So how do you manage your business? You have to start increasing your rates. So therefore, if you look at the miscellaneous category in your CPI, we have seen that lots of these things like your discretionary goods, which are there, recreation, entertainment, health, education, all these prices have gone up. So we've seen generalized inflation in the region of around 7%. Now, inflation would not have been too much of a concern for us, saying that, okay, all of us are being hurt. It's the price which we pay for a major problem like the pandemic, which was there. But this also feeds back into the monetary policy. So what we have seen is that RBI's hands have been tied, because today we say that RBI policy, the monetary policy, is being driven by a monetary policy committee, which has to target an inflation rate of 4% in a band of 2% in a ways, which means that anything above 6% means interest rates should actually be increased. So today we have seen inflation has been above 6% for 4 or 5 months now. And in fact, a parliamentary dictate was that in case inflation goes beyond 6% for more than 3 months, the MPC actually is answerable to the parliament. They are supposed to tell you as to why the inflation has gone up. But everybody understands that these have been unusual conditions. Nobody's actually questioning the MPC. But this also means that scope for lowering interest rates is very much limited. In fact, we can actually rule it out for the financial year, because inflation is going to remain elevated, definitely in the region of, the best case I would say is in the region of 5.5% to 6%. They'll probably be in the region of around 7% for a couple of more months before there could be some kind of thinning of inflation. Now, this entire situation, I think, so when we're saying growth has come down, government has tried to support the poor. They've tried to create the right enabling policies for future growth to take place, which I think is a very prudent measure. So when we may all debate about whether the fiscal stimulus is actually a stimulus or not, but the fact remains is that the government has done its best. It's also making sure that it's following the prudential path. It's not spending money carelessly. So even without spending so much of money, we're still seeing fiscal slippage. So I think the government has probably managed its finances well. But because we have high inflation, it also means that the room for cutting interest rates is can be ruled out, at least for this financial year. Just the last point which I'd like to make here is that if we're looking at the banking system, I think that's one of my major concerns, because the way we have approached it is from the time we had this crisis, the lockdown, I think the RBI introduced a moratorium. The whole idea was that if you're out of job, you're out of production, you won't be able to service your debt. So therefore, it was given for 3 months, saying you don't have to pay interest, you don't have to pay your principal. Extended for another 3 months. It came to an end in the month of August. But at the end of the day, the money has to be repaid. And a lot about the ability of companies to service the debt, the ability of individuals to service the debt, depends upon whether you're earning a kind of profit for a company, or whether we have a regular income which we're earning. And we've seen that during this 8 months, there have been a lot of layoffs which have taken place, a lot of salary cuts which have been invoked. Some of them have been reversed by some companies. But in general, I think all of us are worse off in terms of our disposable income, which means servicing debt, of course, is always going to be a challenge. And that's why we feel that the increase in NPAs could be another kind of a black box for us. We really don't know what this number would be. Our own estimates are that it could be around 5% more. So if I'm talking today of my GDP, of my NPAs being in the region of around 8.5%, it could go up to around 13.5% to 14%. Now, this may not surface immediately because we have a situation here where there's a one-time restructuring program for bank loans, which has been offered. It's still in process of being implemented. We have a lot of SME loans which have been restructured. So The NPA norms have been made more liberalized in terms of recognition, which really means that a clear picture will not really emerge. So if you look at the Q2 results of banks, I think all of them are showing lower NPAs, which is understandable because you don't have to call a non-paying asset, a non-performing asset an NPA because RBI has given you leeway till the end of the financial year. But maybe after March 21st, I think one has to be a bit cautious. One has to monitor this entire sector because we've just about gotten out of this rut of high NPAs. I think in 1920, we thought it was the worst of it. And now there's a lot of, I would say things are very nebulous right now on account of whatever allowances have been made by the government, by the RBI. But just remember, if the economy is degrowing, we're falling by 8%, logically, our ability to service debt has to come down. I think we can call it restructuring. It could be any kind of camouflage, but at the end of the day, I'm not quite sure if an economy which is degrowing will actually be able to keep your NPA levels down. Will I be able to service my debt? So that's one of the concerns which we have. And of course, in this kind of situation, I think there's a lot of debate also, a lot of discussion. Again, people are very happy saying that next year will the growth rate be 10, 11, 12%. What do you mean? That's going to be nothing more than a statistic, because when I'm going to fall by 8% this year, anything next year is going to be a big increase. The important question we need to ask is that for an economy which is growing, am I creating the right amount of jobs? I think that's most important. And that right amount of jobs, I mean, because jobs create income, jobs create consumption power, and that actually feeds into your entire industrial structure, your industrial demand. In fact, what Anirudh was talking about, that look, manufacturing is of course very important, but what keeps manufacturing up? I need people to consume, I need to have higher spending power. All of us need to be spending on goods and services, especially goods. That's when your manufacturing sector grows. I need to have a lot of investment taking place. Now, investment rate even before the pandemic has fallen from 34% to 27%, I think 27 or 26%, which means that investment has been coming down even before we had this problem. And now with this kind of problem coming in, companies have surplus capacity, nobody's going to go into investment. And lots of people are looking for the government to spend on capital expenditure. The government has done its best. I think even in the policy of Thursday, they have spoken of spending additional 10,000 crore rupees. There's 25,000 crores they spoke of in the earlier Atmanirbhar 2.0. Is this really enough? So if I'm actually talking of making India a manufacturing hub, something which can invade the global markets, make a big difference, I'm very much suspicious whether this kind of thing can happen anytime soon. Because the way we have evolved, we're more a service-driven economy. I remember even in the earlier regime of the UPA, we were talking of making manufacturing hub, talking of the share of manufacturing going up to 25% of GDP. This has been spoken of for the last 10 years, but somehow I feel that there's no concerted effort which has been put in to make sure that we do more manufacturing. And so unlike Anirudh, who seems to be very much optimistic and positive about the future, well, I'm not pessimistic, but I think all economists tend to be very cautious. And I would say, while it's good to dream big, dream large, think of big numbers, but let's not scale up our expectations too much. I think the Indian economy has slid quite badly in the last 4 or 5 years, ever since we've had demonetization. We haven't really recovered from it. So it's going to take a long time before we can actually reach it. So we all talk of this $5 trillion target economy. It's total nonsense. There's no point of talking about a number. We need to create jobs. That's the only way in which the economy can revive. And when we say jobs are being created, I use CMI data and says it's not happening. You use the EPFO data and say jobs are being created. At the end of the day, if jobs are being created, people should have spending power. Why is that money not coming into the market? So this debate has been going on for the last couple of years, but we have seen stagnation in industry in the last 3 years. This is going to be another downhill for us. So I think my sounding word would be, let's be cautious in our expectations. And yes, we need to think positively, but I think there's going to be a lot of action which has to be taken primarily by the government. I think the government can only kickstart the economy. Expecting the private sector to do on its own may be a bit far-fetched at this point.
Right. Thank you, Mr. Sabnavis. I think, as you rightly said, we heard an optimistic view, but we also heard the realistic view coming from statistics, figures, and analysis that you are normally engaged in. Thank you so much for setting the perspective, and I'll be happy to lead some of the questions which are already there with us, partly in the chat box and through messages to us. You can choose to answer them as appropriate. This is the request to both of you, Anirudh as well as Mr. Sabnavis. One of the first things that has come as a question and more of a request to make an observation, would you also compare the impact of all that you suggested on urban India versus rural India? So the India versus Bharat, as they keep talking about. So would you like to make some observations, sir, Mr. Sabnavis?
Yeah. See, if you're, when we had the Q1 results coming out, we track what these investor surveys, not investor calls made by different companies, and we saw that there was a large dependence or a large hope that rural India would be the one which would be driving the economy. And I think a large part of that has probably turned out to be true in terms of this particular quarter, where we have seen automobiles, especially if we talk to the auto sector, they're saying that there's been fairly rather buoyant demand which has come from the rural areas. I would say rural has been ahead of urban. And I think the very fact that we've had a good Kharif harvest, the prices received have also been higher than the MSPs, which means that farmers' income have increased. And definitely there's been a certain amount of spending power which is coming from the rural sector. Now, when we're talking of rural and urban, I think we should remember one thing, that the sector which has gotten affected more by the economic lockdown was the urban sector. So if we're talking of the urban SMEs, they were the ones which were affected. If we're talking of all of us working in a corporate sector, all of us have been affected in some way or the other in terms of salary cuts, not getting your increments. So therefore, or layoffs being the worst case scenario in a number of companies. I think the overall purchasing power of urban India has been more or less restricted this time. It has been the rural India which has been calling the shots. This is not to say that everything is doomed in urban India. We have seen spending picking up in a limited manner, but it's more a case of saying it's a need-based spending which has taken place rather than discretionary spending. So I think that's a very big difference which we have seen in this scenario.
All right. Anirudh, do you want to make any observation on that?
Sir, as far as rural India is concerned, there are only two ways income can grow. One is your irrigation level goes up. The land under irrigation has to go up from 40% to 60%. And that's a long-term process. Sorry. Am I audible, sir?
Go ahead, Anirudh. Continue.
Sir, there are 2 pointers. One is as far as rural India is concerned, most of it is still agriculture. So for agriculture to happen without dependence on rains, the land which has been cultivated is now, as of now, under irrigation is 40%. That needs to go up to around 60% in the next 5 to 7 years. So given that, then the incomes can increase. Of course, this APMC Act and willingness to sell produce directly, that helps. There are win-win situations and business models there. So like sometimes what you see is outside my office or say on the main road when you're returning from work, you see a trucker selling goods at 1/3 price or half the price which you get at the local vegetable vendors. So generally, how does it happen? The farmer sells it to somebody and that fellow sells it everywhere. So the farmer gets an advance, number one. He gets slightly higher pay than what he gets from the agent who buys his or the wholesaler who's there at the mandi. And he benefits there and as well as the buyer benefits. So that is one observation which is there. So that could be a driver of good long-term inflation, low long-term inflation in India. As it is, oil is low. So that could be a good thing for us going forward if more farmers did this.
So just to add one more point here, see, we should remember when we talk of the rural economy, it's around 40-45% which is agriculture. There's another part which is non-agriculture. So that actually is typically your SMEs which come into your manufacturing and services. Now, when you're talking of this pandemic, it's affected SMEs across the country. Okay, so it's not just the people in Dharavi who have gotten affected. It's happening all across the country, including in rural India, because they have these strong linkages with companies in the urban areas where they're supplying goods and services. So this is another segment which needs to grow. So I would say that one reason why your rural demand so far has been more or less, let me say, it's been restricted more to what's happening from the farm sector, because the second half of the economy has not been showing the same kind of buoyancy as we have seen on account of the good Kharif harvest.
All right, I think these are very valid points, and I'll move on to the next question, which has come from one of our participants, Mr. Shankar. And I read, normally inflation is associated with weakening of the rupee versus the dollar. This time the exchange rate is even better than the pre-COVID rates. Your comments, sir, Mr. Sabnavis and Anirudh.
See, if you look at inflation, as I mentioned, the inflation is high today because of primarily food inflation. I'm talking of inflation being high in terms of transport communication, which is petrol based. Now, food inflation has been high primarily on account of vegetable inflation, and I think to a certain extent, what we call protein inflation because of pulses and because of certain meat products, eggs, fish, and so on and so forth. These are things which are not related to the exchange rate. Now, the exchange rate can affect inflation only through the imported route. Now, today we are in a situation where oil imports have actually come down, oil prices are down. So therefore, there is no threat of inflation coming through the exchange rate route. It's being caused purely by domestic factors, more on the supply side, over which actually neither the government nor the RBI have any control. And we have seen in the last month, because in the month of October, because the monsoon had overstayed, it should have withdrawn by the end of September. We've seen there's been a destruction of the crop, onion crop, potato crop, tomatoes to a certain extent. And given their weightage in the CPI index, we have seen that the inflation for vegetables in particular has increased sharply, thus leading to this kind of an inflation.
Anirudh, like to make an observation?
No, sir. Very valid points by.
Yeah. Anirudh, specific to you, there's a question about what would you think is going to happen further in the banking sector? What kind of reforms do we expect? What is going to be the way ahead?
Sir, the major path-making reform for the insolvency and bankruptcy code has already happened. A key challenge for economic recovery, I am a realist in that camp. From that point of view, that if you see now, the government has not allowed for filing of any new insolvency and bankruptcy cases against people who did not pay. So let us say if there's a SME in Ludhiana and there's somebody who's there in, say, Tarapur, and that SME in Ludhiana owes above a lakh, people could have taken that person to under IBC and his assets could have been under a threat. So that situation is not there till March, but then it depends on how situation evolves. So because the banking interest factor moratoriums are, I think Supreme Court is yet to take a decision as on 19, that is tomorrow. So that picture is not very clear, but then point is most of the people are servicing their debts, but supplier payments and other things are not happening so far when we talk to people on the funding side of it. So looking at banking may see some stress. They are already seeing stress on profitability. This delay in terms of dates, every time the date gets extended by a week, 2 weeks, primarily in our opinion is to preserve the profitability of the banks to ensure that a minimum profit is there this year, without which we don't see the profitability in the projections. Now coming down to how will the sector recover, most of the SMEs do not have books which will be taken care of by mainstream banks. So what happens is they would need to go to NBFCs. NBFCs unfortunately have been hit harder than most. How do we know this? Very less paper has been coming out of NBFCs apart from the gold loan ones, on which we have been confident. But then apart from that, we have not been confident on anything else. So as per our research group, which we met last week, and we did a Zoom call for an hour and a half. So there our perception is that March 2022 is what we expect the NBFC sector to revive fully. And that is how the broad-based economy will also look at. And that is an optimistic view to some degree by some people, but I would say that it could be 2022, it can be mid-2022, that is October 2022, depending on the credit offtake which happens post-COVID.
See, here actually I would like to add one thing. See, I think the NPA issue in terms of IBC has been addressed by Anirudh, but I think there's another issue of capital, especially for public sector banks. That's something which at the policy level, the government level, they'll have to think very carefully. Because today, as I said, the NPA is all covered up, you really don't know what the real situation is. But at some point of time, you realize that you have to make high provisions for NPAs. And again, you go back to the situation of saying, where do I get my capital from? And so I think this is something which the government will have to work in parallel to make sure that you provide for it. Because I don't think the government at this particular point of time is willing to disinvest or privatize the public sector banks. I don't even think it's a good idea. But any which way, you'll have to make provision for capital because you're the owner of public sector banks. And in case the requirement or the need arises, you should be in a position to supply. I think NPAs and capital are the two major issues for the banking system.
All right. One more question related to rural India. Like we discussed about how artificial intelligence and the latest techniques can improve yield in farming. Can we look at some more such initiatives? Would you share some of your thoughts on this, Mr. Sabnavis?
See, if we're looking at agriculture, I think there are a couple of problems which we have there. One is that our productivity levels are not increasing. Number two, farming is not considered to be a very lucrative job. So one of the reasons as to why we have had a lot of migration taking place from rural areas to urban is primarily because of, as what Anirudh mentioned, you're too much dependent on the monsoons. It's too much of distress which comes when the monsoon fails. And this always happens every year in some pocket to the other. And that leads to farmer suicides at the ultimate, which is the ultimate step taken. But no farmer's son wants to be a farmer. So that's one of the reasons why there's been this large scale migration. In order to make agriculture more lucrative, we have to look at it as a commercial activity. Currently, it is being looked only in terms of, okay, there is a farming community. We cannot accommodate them in the urban sector. We cannot bring them into the mainstream. So let them continue doing farming. There are bits and pieces of goodies which are thrown at them at points of time, do a farm loan waiver at some point of time, and there are certain minimum allocations which come from the central government, state governments give something, but we've never really tried to commercialize it and make sure that it is a kind of an occupation which people would like to work for. So I'm also in favor of having some kind of state-run farming. I think the state government needs to get more involved in terms of farming to make sure that we improve productivity, we're able to get better prices for the farmers. So one thing is to say that have these reforms which talk about selling directly, which is a great idea. It's also a very great idea to make sure that you can have contract farming, but how do you make it scalable? How do you make sure it works across the country? But that makes a lot of sense. You have something like contract farming, where if think of this idealistic situation where all farmers are connected with your Pepsi and Cokes, which provide you the seeds, provide you with all the ingredients to make sure that you're able to improve the high quality of your crop, which could then be commercially sold. I mean, that kind of a situation is what we really require. But given the fact that today it's more of a personal kind of thing which happens farming, and there's not too much of coherence in terms of all these policies, I think that's what's actually holding farming back. You have to make it lucrative, make sure that people actually look at farming as a commercial enterprise, not just as a means of livelihood.
Exactly.
I understand. I guess there is a request for both of you to do a little bit of crystal gazing. We did mention about this 5 trillion economy. Is it realistic? Not is a debate. And I think Mr. Sabnavis, you already touched on it. What do you think is a realistic estimate, let's say by 2025? Where can we expect the Indian economy to be at?
Yeah, actually, if we're looking at a GDP, we're talking of a nominal GDP size of $5 trillion. So I'm actually talking of something like 375 lakh crore rupees. Okay. And today, if I look at my GDP for 2021, given the fact that there's going to be a decline, I'm going to come down from something like 220 lakh crores to slightly less than 200 lakh crores. So if I have to go from 200 lakh crores, I think just take out a calculator and see and reach a number of 375 lakh crores, assuming that the rupee does not depreciate greatly. It is a number of years, practically speaking, realistically speaking, we would take. It would take my mind around 7 to 8 years. And that way there has to be sustained growth in my real GDP with inflation, which is controlled in the region of around 5%. So I'm actually talking of something like 12 to 13% average compound growth rate from next year onwards, right up to the point of time that we reach 375 lakh crores.
All right, I understand. Anirudh, want to hazard a guess?
So basically, this number was put up for 2024, that $5 trillion one. And I happened to be at the ET conference, which when this number was proposed, after a month when this number was proposed. But then point is, circumstances have changed. So if you look at the private sector balance sheet, it is bleeding. The government is also not doing so well. They are able to sustain expenses, but nothing more. What we think is that around 2-3 years from now, from 2024 is a number, 2027 we see 5 trillion. That's a realistic number. But before that, maybe 2026. That's a best case scenario. Worst case scenario, of course, is if we grow at 5%, we'll reach there in the next 10 years. That is how it appears at this stage.
Okay.
We should remember one thing, Professor, that even though we are talking of this 2027, we are so optimistic talking of an 8 to 9% growth in real GDP growth, which we have not witnessed in the last 5 years.
Exactly.
So from where are we thinking of this 8 to 9%? Where is it going to come? And numerically, I just put my calculator and said that Anirudh is saying the same thing. 26, 27 we will reach. But how am I going to get this 8 to 9%? It hasn't happened in the last 5 years.
No, it is not. Which is why I'm saying that 2030.
I understand. All right. We have Indrapal Singh Ji with us, who is our past president and doyen of industry, having worked with about 4 decades with Godrej. Sir, over to you for your observation and question.
Yeah. Hello. Am I audible, please?
Go ahead.
Yeah. My worry is about the job creation, because that seems to be, I think, the biggest single factor that is not given enough attention. Because you read every day in the business papers that all the companies are restructuring and they're reducing jobs and cutting costs, etc. When they say cut costs, means we are reducing number of jobs and letting people go. So in that kind of a scenario, agriculture being what it is, where are we going to create jobs? Is government going to fill in the gap of that is there in job creation of say 4 million jobs every year or something like that? So how do we really create jobs? I think that side looks very, very dismal indeed. Any comments on that, please? Or what should we do? I mean, a couple of things that we should do, 3 things we should do to at least move in the right direction of creating jobs.
I think what you're saying is a very scary scenario, because if I combine it with what Anirudh said in the beginning, talking of artificial intelligence, if AI is going to replace you and I, even people like us will not be getting a chance to talk on this particular forum. Yeah? And it's a scary thing, because I think that what we have seen in the last 3 to 4 years, because we've done lots of studies based on annual report data on employment, we have seen that the growth in employment has actually been coming down in most sectors. So the only places, the financial services, IT, that's on the services side, we have seen some kind of thing happening in the pharma, FMCG sector. Otherwise, it's been down, because when you're talking of investment coming down in the economy, the capital goods industry is actually not adding jobs. So where do I add the jobs? I need to get manufacturing back on its feet. So that's the only sustainable kind of thing. But if I'm talking about Anirudh is talking about getting more machines to do my work, I don't see a very bright future for us. This demographic dividend we're talking of is going to become a demographic disaster.
Yes, Anirudh.
Thank you for, I think, a realistic view, because I suppose that gets kind of glided over in a broader discussion, and minute attention is not given. Say, for example, all the government services are so pathetic. I mean, is there a scope to employ a little more there? And I suppose every state-wise, district-wise, some strategy could be worked out, so that at a very grassroots levels we have better services for people, so that the barriers are removed, some jobs are created, and the average citizen has more energy to pursue his goals, in terms of either small business or agriculture or what have you. But I think the way we seems to be, what we are talking on one hand is quite opposite of what is the reality.
In fact, even if we look at data, we don't get too much of data on government employment. But look at central government. Earlier, the employment is increased by 5 to 6%. Today, it's around 1 to 2%. Even at government level, at the public sector, we're trying to cut down on job creation. So everybody is cost conscious, and what you rightly said, when things are not good, the only thing you can do is cut down on cost, cut down on cost, cut down on labor. So it's become self-defeating, because we're required to create jobs. That's the only way in which you can keep consumption running.
All right.
Exports. Sorry, one last up on exports front. Do we see any bright sort of direction? Any new sectors opening up besides the previous one, like IT, etc., or where we can create a sizable presence in the global markets?
Anirudh, if you have a positive, optimistic view, you give it. I'll give the darker view. So let's hear the good part first from your side. If you have
Anirudh. What do you think, Anirudh? There's a related question even in the chat box that what do you visualize the impact of increasing exports? Will that have a positive impact on the economy, and how is this actually workable?
Sorry, sir, 1 second.
No problem. I think you have a network issue. Skip your video and stick onto audio. We are able to hear you clearly.
Fine. Now,
No, now you're muted. Please unmute and put off your video.
put off my video. 1 second. How do I do?
Okay, I'll do that for you. You continue to speak. Yeah, go ahead.
Sir, limited observation there has been that if you look at the Tata Group chairman, he had made some observations on AI that could be a source of growth going forward. That is also one of the strength areas of our country. So that is one area where we can grow hopefully in the future. Second is, if you ask anybody socially or otherwise in any association you meet or forum you talk to, if you ask people what do they like to do, they would like to travel. So tourism is one thing I think people would have a future in. Provided infrastructure is there, facilities are there, and a good experience for foreign tourists as well as the Indian side has been there. So given the fact that COVID is there, most people may look at their first vacation after COVID on a local side. One is economic reasons, second is safety reasons. So that is how things are panning out as far as the social milieu is concerned. So tourism is one thing, of course, people would like to consider, and that is one area where jobs would be there over the period. It could be domestic, it could be international, that could vary depending on the person's inclination, interest, and the overall environment. Right now, the environment is not favorable for anybody to travel internationally.
Okay, so if I have to come on this issue of exports, I think we need to understand that India is not an export-oriented economy, not like the East Asian economies, which were able to build a model where the economy grew on the back of exports. I think exports are more of a kind of a supplement for us. They help certain companies, they help certain industries, but we've never really managed to make a mark, even if I'm looking in terms of conventional goods and things like, say, textiles. I think we are always complaining, trying to fight with Bangladesh, Pakistan, Vietnam. So I don't think we're able to make that kind of a mark when it comes to exports. And we still seem to be a more domestic-oriented economy. And even when we had these trade wars, US and China, I thought we were just talking big by saying that, look, we can go and capture the markets which China is leaving. But finally, at the end of the day, we have seen that we have not really been able to make much room, much headway. I'm not quite sure what's the reason of it. Is it the quality? Is it the kind of goods which we're producing? Is it the pricing factor which we have? There are lots of explanations which you gave, or is it that the government needs to play a bigger role out there? I'm not quite sure where the answer lies. But the fact remains that historically, we have seen that even when our exports have grown continuously at around 20-25% per annum, we've never really managed to use exports as a prop for the economy. In a way, it's worked well for us because whenever we've had a global recession or we had the Lehman crisis, we were not really affected because we said that, look, we're not an export-oriented economy, we're not that outward-looking, we're a domestic-oriented economy, so therefore we were able to do well, even when the world was going through a recession phase. So therefore, I think exports are something which help us in terms of our balance of payments, in terms of our current account deficit. And what you mentioned, sir, about software, yes, in terms of services, in terms of software, we see a lot of hope out there. But I think if you're looking at our balance of payments data, we get to know that software now has increased from $60 billion to now close to $95 billion. So that's a large amount which we're getting in. And I think that's something which works more, I think, on the service side rather than on goods. On goods, I really don't know what's the way out, but we have been talking about it for a very long time, but we've never really managed to probably get hold of the handle of it.
Fine. We have with Mr. Ashok Sharma. Sharma ji has been our past president of BME, again, a very senior industry veteran with over 3 to 4 decades of experience. Sharma ji, over to you. Just unmute and you can speak. Ashok Sharma ji. All right, while he gets onto the screen, I am handing over to Mr. Pramod Shah, another industry veteran and also a member of the executive committee of the Bombay Management Association. Just unmute Pramod ji and you can speak. All right, Pramodji, you can speak.
Can you listen, sir?
Yes, go ahead.
Thank you, Professor, for this opportunity. Sir, my small question to Mr. Sabnavis is, sir, we have this, always we talk of the demographic dividend and all that, sir. Now, in continuation of Mr. Interpalji talking about the employment aspect, so I would like to know, sir, whether this demographic dividend will be able to absorb them in proper employment or not. And sir, your other comments on the educational field, sir. Do you feel that this new president of USA coming up, there will be good opportunity for the Indian students to go there, study, and come back again? And about the education, the skilled labor, what are your results for better prospects for the skilled labor? And so presently, the education in the schools and colleges given on online basis. Now, so there are many poor students, they can't afford all these electronic gadgets. So they do suffer. And so what do you feel would be the solution, sir? Thank you.
I can take some of the questions. See, when we're talking in terms of demographic dividend, I think that's always a challenge for the government as to how is it that we provide jobs for all these people, because what we have seen in urban areas, big cities, in fact, the reason why we have increasing incidence of crime is essentially because of people who come here and refuse to take up certain kind of lower jobs. Everybody wants the higher level jobs. When you don't get the income, you see all the goodies around, and that leads to another social kind of a problem. I think that's a problem which we have, because, and I think our education system in India is very much skewed, that when we talk of the higher skills, I think today, how much ever we say that even the new education policy talks of saying that you should have an education in your mother tongue. But the frank thing is that you don't have an English education, you don't have too much of hope of getting into one of the better companies, better jobs in the country. So I think that's a kind of a limitation. How do we actually balance this kind of a factor? So it's with more use of technology, we have seen that when you're using more technology, you suddenly realize you need to employ less labor. I think this is an issue which we already spoke of earlier, which is something which is coming in the way of job creation in the country. And to my mind, we cannot really fight these trends or these waves which are on right now. And this will be a nagging problem for the country going ahead, because A, we're not creating enough jobs, and B, people who have reached this particular age where they're looking out for jobs are not getting the kind of jobs which they want. That's, of course, a challenge. Again, there's no answer for it. I'm sure if there was an easy answer, the government would have probably addressed it. Now, the thing about this online business, one just hopes that this is a temporary phenomenon, and at some point of time, we all get back to the normal education. Because it has been well established that what is taught in a classroom cannot actually be taught online, because a child just doesn't require to know physics, chemistry, maths, and so on and so forth. A lot of it happens through social interaction, interacting with other children or other students, even at the higher level, you're talking of college. So one would hope that what we're seeing today is more of a stopgap arrangement, which is there because of the absence of the real thing which one cannot experience on account of whatever conditions we have around it.
Sure, I'm so glad to hear that, Mr. Sabnavis. Coming from education, I'd like to reiterate that we'd love to go back to the classroom. And of course, blended learning, I guess, is going to be the order of the day as we go on, where we are able to use the best of both the digital world and the classroom world. As you rightly said, peer learning makes so much of a difference in the classroom scenario. Ashok Sharma-ji, over to you now.
Yeah, thank you very much. I have no questions, but I want to compliment both the speakers for the excellent information they have given us. Very, very useful. Thank you very much.
Thank you, Sharma-ji. Mr. Sabnavis, there's a further question in terms of what could be India's strategy to boost exports, because there are many markets which China has vacated. Can we do something to grab those markets? Is enough being done? What are your observations?
To my mind, I think more than the markets being where China has exited, it's a case of saying that we look at the goods where we have a competitive advantage. And a competitive advantage is not just in terms of price competition, but also in terms of quality. Are we actually producing goods which other countries require? Or is it a case of us producing certain things for the domestic market, producing surpluses above that which I'm able to export? I think that's where the difference really lies. So I think it has to be a concerted effort taken by the government, where you actually have a special cell which investigates, finds out which are the areas which we have to go into, which are the commodities which we should be specializing in, and which are the ones which can be pushed into which market. Because we should remember that even if China is exiting from certain markets, there's a lot of competition with other countries which are probably producing the same goods, maybe at a more competitive, in a more competitive manner, both in terms of price as well as quality. As I told you earlier also, I don't have an answer. It's not easy, because if it was easy, I'm sure it would have been addressed by now by the government.
Absolutely. Anirudh, this is specific to you, considering your background, having specialized in management yourself. The normal complaint is that a management program does not make people employable enough. Isn't this the opportunity to really rewrite all the rules of the game and focus on employability and ensure that this could be a game changer for all young managers? Anirudh.
This question needs to be answered in three parts. First part is when you look at the prism in terms of adding value, every individual has certain skill sets. Assuming that skill set is, that basic understanding or inclination is figured, then you come to a profession. So that profession could be capital markets, it could be design thinking, it could be the manufacturing shop floor. So it could be a startup, it could be AI. Like there are people who have AI ventures in certain locations like Bangalore, Coimbatore. You have some companies in Pune also who do that kind of work. So point is, what is the focus and future of management education? The ideal person to answer that is you, sir. But then I'll hazard my guess. My guess is that it has to be a mix of digital thinking, how to build a business online across all functions. That has to be the focus of management education. Because one lesson from this COVID has been that business has to go on come what may. And for that to happen, as far as our basic thinking goes, I think at a company level, or most of us have just done the first phase, 1 out of 10, if you look at the level of certification, as is in many areas. So, but then the bottom line is that till the time we adopt a digital mindset totally, it will not work for us. So, unless it's a service industry where a personal touch is, of course, relevant. But then for most businesses, personal touch is relevant. But then bottom line is, many things can be done online, like it is done by Infosys or the likes of TCS or the HCLs of the world. But then crux is this, that it has to be an online focus with a drive or to add value to management strategy or business strategy, if that is the thing which you are good at. So that is what I guess is a thing. If you're looking to be an entrepreneur, exciting times, if you can manage the upside and the downside, it's a good thing to look at.
Like to make an observation, Mr. Sabnavis?
Actually, I really don't know. I've not done management, so I don't know what goes into a management course. But all I can say is that there's a plethora of management institutes. I don't know if it's good or not good for the country, because they have different levels. There are hundreds and thousands of them. When you look up India Today, every magazine has some ranking of these management institutes. And the whole question is, am I creating too many management graduates? Now, one thing is that there's always a demand for a certain level of management students, depending upon how much companies are willing to pay at the entry level. So therefore, it looks like there's a market for everyone. But then we have seen that in these kinds of downturns in the economy, generally there's less demand for new hires. There's always a problem in terms of there being excess supply of management graduates coming from various institutes. And there's a lot of cherry picking which happens at the company level. So I think that's a kind of a problem which is definitely there.
Right, sir. Just on record, there are close to around 4,500 plus officially registered management institutions in the country. So that really confirms the anxiety which you expressed. Thank you so much, everybody. That was a very, very active, interactive session. I know we can go on for an hour, but both Mr. Sabnavis and Anirudh have spared a lot of their precious time, that too on a working day, and we sincerely appreciate you for the same. I'd like to now hand over to my colleague, RSR Murthy, who himself is a member of our executive committee of BMA, formerly CFO with Madison, and currently a leading financial consultant. Murthy, may I request you to please do a small wrap up and also propose a vote of thanks on behalf of BMA. Over to you.
Thank you, Professor Mani. It was a pleasure listening to Mr. Madan Sabnavis and Mr. Anirudh Gupta. As is to be expected, two economists, two different perspectives, and both the perspectives are indeed very, very valuable. it's not easy to do a crystal gazing when it comes to what the future holds in terms of the economy. And of course, all of us are very much concerned with the way the economy would go. One, of course, we had that upping the antenna in terms of a US dollars 5 trillion economy. There was a lot of conversation which was going about it, the pre-COVID times, and suddenly we had this worldwide pandemic. Yes, it's very challenging, but I think we should thank Mr. Sabnavis and Mr. Anirudh Gupta for a wonderful session. I personally would have wished this should have gone for at least 2 to 3 hours because there's a lot more that we could have gained from both the speakers. And of course, there are fundamental shifts which are happening in terms of the environment in which even the Indian economy would perform. There are headwinds, of course, the pandemic and the consequences of the layoffs and how long will it take for the economy to revive, right, sir? But there are also tailwinds. Yes, there are opportunities with the China bashing that's happening all around the world. And let us hope for the best. And of course, in terms of the employment scenario, I personally think that probably the measurement of employment in the conventional context of master-servant relationship is not the future, and more it will be the gig economy to start with on the urban side, and the challenge for the government will be to how to extend it to the towns and of course the rural economy. I think we have had wonderful insights. Thank you very much, Mr. Sabnavis, and thank you very much, Mr. Anirudh Gupta, for valuable insights. Hope to probably have this session again with both of you, maybe after 3 months or 6 months, to just see where we stand in terms of our expectation on the economy. Thank you very much.
Thanks, Arasad. And I think that's a wonderful suggestion, maybe to get back both of them with their consent to give us another round of wisdom a couple of months down the line. Thank you very much to both of you. Before we kind of wind up for the day, may I request that we have our usual group photograph, though digitally. May I request everyone to put on their cameras so that we capture this moment that we spend with our dignitaries this evening, Mr. Sabnavis and Anirudh Gupta, who shared their wisdom with us on the economic outlook in the medium term. Please allow our digital photography experts, well, I was just joking, they are the very efficient staff of the Bombay Management Association. Supriya, Oindrilla, and Lakshmi will do the honors. Please put on your video cameras. Have some digital patience. We are across 3 screens, so they will have to capture all of us across there. We had about 62 people who were attending this session. For those of them who missed it, a couple of days later, it will be hosted on our BMA YouTube channel also, for those of you who wish to see this again and understand the finer nuances of what was discussed. Cameras on, please. I still see a lot of people with their cameras off. Please put on your cameras so that our colleagues in the secretariat can do the needful. In the meantime, your suggestions are welcome. Your feedback is welcome. I'm happy to share with you that the next 3 sessions that we have planned as part of Wednesday Wisdom webinars and Friday Fundamentals are as follows. Coming Friday, we are hosting a CSR conclave where we have a couple of international and national speakers, a total of 12 of them, talking on various aspects of scaling up social initiatives and the concept of CSR. This is ably directed by the well-known Sri Ganesh Natarajan, who has been a very, very leading management thinker and is also part of the IMARC Council. That's happening day after tomorrow on Friday. Next Wednesday, we have a very unique session with one of the Padma Bhushan awardees in the field of music, hailing from Chennai, Sudha Raghunathan, who is going to discuss with us the nuances of the Guru Sishya Parampara and how it has impacted the entire process of music. Next Friday, after this Diwali celebrations, I think we need to start thinking about our health. So we have, as part of BMA Wellness Series, a leading cardiologist, Dr. Vishwanathan, and a leading gastroenterologist, Dr. Roy Patankar, who will be talking to us on how to manage your heart and your stomach. As they often said, the right way to a man's heart is through his stomach. So we thought, let us interlink the two and see how we can have a session on wellness. That's what you can expect over the next 3 weeks. Those of us who are in the BMA family will be getting their emails, updates on all these. Others are welcome to join the family and be part of this learning exercise. So please continue to be with us as part of our Wednesday Wisdom webinars and Friday Fundamentals. Thank you very much, team, for completing the photographs. Thanks one and all for being with us here this evening. Stay safe and get back to work as long as you are safe. Thank you very much.